Hi everybody, it's Anthony Fletcher. Thanks for coming to my channel today. We're going to go over 3 different letters that are used in the mortgage industry when you're a buyer are looking for a house. So these are all going to be important because the sellers and the realtors are all going to want to see these type of letters, and they're very different strengths amongst each one of them. So let's jump into it. The first one is called a pre-qualification. The second one is a pre-approval, and the third one is a credit approval. The pre-qualification, it's basically if you're going to go in there and just talk to a lender either over the phone or if you're going to go meet them in person. It is going to just provide them you're going to provide them verbally or written, that type of information. And then what they're going to do is they're going to get their best guess, formulate a scenario for you, and give you their best guess of whether or not you will be approved for a particular type of loan. Now, they have no idea realistically the true amount of income that you have because you're not providing that type of documentation. They don't know the type of assets that you have. Then they don't know what the credit score is. It's purely hearsay based off of what you have to say. So it's kind of a weak type of review, and it's only a qualification. And so it's almost just like a guess. The second type of loan, type of pre-letter that's out there is called the pre-approval. And that one carries a lot more strength. It's the one that a lot of realtors and sellers and builders will actually want to see in your hand at the time you're going to make an offer. And by doing so, they're going to take all this information that you gave them verbally, but they're going to now document it by one, they're going to get your tax returns or W-2s or pay stubs. Also, they're going to get your bank statements and also pull a full credit report and complete a full application. And they're going to run all that information through a decision engine. And what's going to happen from there is that decision engine is going to give you their approval, or it could be a not approval, or it could be a refer. And once you've got that, if it's an approved this response, the lender can go over, give you the actual breakdown of the scenario, and then what they can do is they can provide you with an actual letter. And that letter can be given to the listing agent and also to the seller. And here's a sample one that I pulled off the internet. And it just basically just kind of has the person's name. And then what it does is just tells them that they've been pre-approved. It tells them the type of loan, the loan amount out there. And then also it tells them any other documentation that they need, like the appraisal or title report, other different bank statements, things like that, if it comes available and is required. It says that the pre-approval is good for 90 days. Basically, that's how long a credit report is good for. But it is not a guarantee. If there's anything that changes in your information, or let's say interest rates go up, it could eliminate you from getting that loan. There's no requirement that the lender actually guarantee this pre-approval letter. So the final one that's out there is called a credit approval. And what that letter is, it's one where you're going to go the next step, and then you're going to ask the lender to submit that documentation to an underwriter so the underwriter can fully review that loan package. They're going to review all of your bank statements, your pay stubs, your tax returns, all that information, your credit, the whole loan scenario. And then what they're going to also do is maybe ask for the documentation to follow up, like verifications of employment, verifications, deposits, explanation letters. All that information is going to go to the underwriter so the underwriter can review that. Now, once they complete that review and they sign off on it, that's basically saying that you're approved for that type of loan at this period of time. So all it is now is you have to find the right property. Once you find the right property, you resubmit that in, and then the underwriter will just basically review the property itself. So when it comes right down to it, this one is a full document, and it's going to be your strongest review, and it's going to be your strongest letter. This letter is going to be about 9 pages long. So is going to list everything on it. You're not going to provide all of that information to the listing agent or the seller. You may just provide that first page of that. So let's go over then the three of these again. We have the pre-qualification, which is your weakest. It's almost like a guess. You have your pre-approval, which they pull a full credit report. It's the lender themselves, the loan officer themselves does their review of you and then creates a specific letter for you. And then the final one, which is the strongest one, is the underwriter full credit approval. I hope this helps, and I hope this kind of helps you as far as understand any ambiguity of this type of information. Sorry for that. But if I can help you with any questions, please leave a comment and please like my videos. I'd really appreciate that. And also please subscribe. Thanks again for your time. We'll see you again. Bye now.